Hey guys, welcome back. Hope you had a good day in the market. GME likes to toy with our emotions. Try and be emotionless when you trade, invest, whatever. Sometimes it's tough, but yeah, it still looks good, GME, and there's a few reasons why, and I'm gonna go over that, and I'm gonna go over kind of why I think price action and what's going on with GME. Kind of my prediction, I guess, a little bit, but I don't like to make price predictions. I'm also going to talk about Mavis, covered calls, options. I usually don't give you guys any kind of, I guess, summary of what I'm going to talk about, but I probably should, since sometimes I have long videos. But yeah, we'll go over some options and go over mostly GME. So firstly, if you watched yesterday's video, GameStop was moving very erratic yesterday, erratic to how it normally does, and it was moving very normal. So that's erratic to how it normally does, at least since I've been watching it this closely. So maybe before the January squeeze, maybe it was moving like this, which it just felt much more natural and raw and real. And there's different theories. I've done a lot of reading, different reasons to why people think that. So the SEC, I guess, they started enforcing one of the new rules they came out with. I don't know if that was the cause for the price action yesterday, and also for the reason that it was so smooth. I don't know if it was them forcing liquidity on leveraged positions, because now they're forcing, basically, you have collateral on these leveraged positions, and so hedge funds had to close out of some of them because they didn't have enough to cover. Not to say they were covering all of them or anything like that, but just that they had to cover some. There's other ideas that the failed to deliver date, and this is kind of a big one that this one I maybe think is maybe the closest to what is happening, because we've seen price action pretty consistently on certain days in the last 6 months or so, and there's so many days after the failed to deliver, basically. And I'm not gonna go into all of it, but the DD on here is crazy. It's on Reddit. I usually just say Wall Street Bets, but I'm really just meaning Reddit, because actually none of it's really on Wall Street Bets anymore. It's on Superstock, it's on RGME, it's on, I don't know. I don't look at a specific thread. I just look at Reddit, and that's the stuff that comes up. So, but yeah, basically they're using the options to kick the can down the road, as you've heard, to keep moving this down, and it's just causing the whole thing to get pushed down the track further. The problem for them, though, is they're just digging in deeper, because this price, as it stays high, it's bad for them, bad for their shorts, and then all these options that they're having to spend money on, and they're expiring worthless. Yeah, so it's so much DD I've been reading. I hate reading that much, but anyways, price action yesterday looked very natural and unmanipulated, in my opinion. And I don't know if it was because the SEC was enforcing rules that was not allowing them to do certain short tricks or short attacks, or if it was certain hedge funds that were actually closing out some positions, so they had enough collateral for their failed to deliver to be able to kick it down further with options. So if we look at this is the iBorrow desk. This doesn't cover all of the shares on all different platforms or trading or whatever, but this just gives a little insight to some. So this was yesterday when we had that crazy price action. So if you see on Friday, they basically used all the shares. These are available shares to short. And like I said, this isn't a complete view of it. But yeah, this just gives you an idea. This is the rate it cost, like the interest. So the higher this is, the more it costs to borrow shares to short, is the amount that are variable. And so this was Friday, and then Monday, yesterday, there was a whole bunch of shares available to short. And then that number actually went up from 350 to 500, 700. You can't rely on this too much, but it's good. I like to look at I like to look at it, see how it affects things, see how things are working. So this was the 22nd. This was 26 when they had a lot more shares available to short. But I don't think they used them, and it would appear that they didn't. Went down a little bit towards the end of the day, as you see, so maybe they borrowed some at that point. And I believe they have 3 days from when they actually borrow it to actually go short on the position. But it seems like it's typically pretty like right away. But I think that is an option that they can use as part of the trickery. Anyway, so the 26th, no, actually stayed pretty much 50,000 at the end of the day. But yeah, so that was the day we had all that price action, and it seems like they weren't shorting. The stock was just naturally, to me, it just felt like it was naturally climbing back up to where it was on its way. Not that it is now, but it was naturally climbing up to the fair value and not this price that's just been suppressed down to. Because when the buy ratio is like crazy, 4-to-1 or whatever, buy to sell, and the stock stays flat or goes down, there's something else going on there. Either options, naked shorts, whatever it is. But yesterday felt natural. And it was very abnormal because I haven't seen GME move like this again. And so that's why I was a little hesitant even yesterday's video, because I'm like, I don't know if this is the hedgies doing something, false breakout. Like I wasn't too certain on what was going on. So read the DD, could have been failed to deliver, could have been the SEC, could have been the stress test, and that might be the SEC thing. I'm not exactly sure, but it doesn't really matter a whole lot. You don't need to get too complex with it. You can keep it simple. To me, I'm going to be looking at the charts and then try and look at some of the DD, but it gets crazy. The only thing I'm trying to predict is how much price action and when. And the failed to deliver thing, this seems pretty consistent if you look at the certain dates. And if you want to look at this is from there's a couple actually I wanted to show you guys. Bank returns with some FTD cycle DD. This is from Home Depot Hank, so shout out to him on Stonk, Reddit, whatever. But basically I was looking at this price action. I think yesterday we had like 15-20%, and then GME announced that they'd sold off all their shares. They were offering 350. Yeah, they sold off all their shares. They said they were going to. And that was during this time, whenever they announced it, this whole kind of grind down, they were selling off their shares little by little. We don't know when. Some theories say that they were doing it to keep GME's strike price at the end of every week in max pain level. And max pain is basically, it costs the most in the options market between the calls and the puts. And I don't know if that's true or not, if that's why they were doing it. Or they were just like, hey, we need to raise money, let's just slowly do it and not tank the stock. But it's crazy that they offered those shares, and this is nothing. This is hardly any drop for GME, and a lot of this was, I'm sure, from the naked shorting and manipulation. But when that was announced that they had already offered all the shares and they're debt free and they, all that, GME went up crazy last night after hours. After already that big run yesterday. So I was expecting with that, great news. All right, we're going to rip up today. Didn't really happen. I mean, if we're looking at the charts, it looks like a bull flag somewhat. On the hourly, it's good. It's just consolidating. Today looks just real low volume again. Yeah, I mean, it's pretty low. But it's actually more than yesterday, which is kind of crazy to think about. Let's look at that. Yeah, it's almost the same as yesterday. Yeah, it's just a little bit less than yesterday, which is kind of interesting. And if you look at iBorrow Desk on here, so this is where we come back to this thing. And today you can see they borrowed those 500,000 or more shares. And then around 11:15, 12 o'clock, looks like more shares came back available, up to 200,000. And now we're sitting at 200,000. So it seems like they suppressed the price action today. I really don't know if this could cause a gamma squeeze this week. But if this failed to deliver, if this is what's happening, then yeah, we're basically waiting for big institution or a margin call. And at this price, they haven't been margin called so far. New rules coming out, being implemented. I mean, yeah, it's just, we're just waiting. I mean, it's a very precarious situation they're in, and it just keeps closing in more and more, but they keep kind of pushing it. So it seems like at any moment it could still happen, but if they're successful in pushing this down, it could be another 21 days. I think it's between 19 and 21 days. And then we'll have to wait. So tomorrow I could be like, wow, I was way off, but that's kind of where I see it right now. On the daily chart, this thing is barely, look at this tiny little green down here. So this is the MACD. On the daily, it's shown not a full reversal really, because this hasn't crossed over, and if this closes green, then that's good, but if this doesn't cross over yet, we're not really in the clear as far as a bull run and like a reversal to the upward side. And kind of more bad stuff, if you look on this resistance line, this is what I was saying we need to break out of, and I'd sent a tweet out about it. If we don't break it and you just do this, because this looks an awful lot like we just bounced off of it or hit it, so that could be the top, and it could be bearish. It could be bearish and come back down, and then I don't even know where to be looking for support, because the lines back here, people draw from all over the place, but like, yes, you could do that and that, but it's not. So I don't even know where to be looking for support if we just bounce off this 4, or this, whatever this is. If we bounce off this, we really needed to break 190 today, but we do still have time. We have you know, it's only Tuesday, and if it just consolidates here, that's honestly just as good, because it doesn't have to break going up. It can be in consolidation. As we move further forward, we're going to be getting pushed further into this wedge, and you know, if we just trade sideways, we're going to cross this if we stay in this range. That makes sense. So that's typically, I don't imagine that happening. I think we're either might trade sideways and then fall because of the resistance, or we might trade sideways and break out. Once we break out of this, it'll be crazy. So what are you telling me, Happy Money? It's gonna go up or down. I got great predictions. Yeah, I don't know if there's enough of a catalyst to break it out today, and if it's not doing it today, there's got to be some other news thing, or the hedge funds that are committing illegal atrocities need to be suppressed somehow, either by the SEC enforcing rules, or margin calls, or whatever. And without that, this might get kicked down another 19 to 21 days. And if you look back, this was another thing I was looking at. So here was the last one, 19, 21 days in this range, and it had this was the earnings, and then it had this run up. I think this was 50%. So this is probably the weakest one. 120 to maybe, I guess you could say 200. And then, but yesterday, see, this wasn't like a full, that's why I wasn't sure if today or tomorrow we're going to go more, because this wasn't it wasn't as much as any of the other ones. And potentially that's because we're further down in this kind of wedge form, and we're just consolidating tighter. So maybe that's why. If you look at this one back here, this one was huge. It was 44 to 200, almost 190. Then the other failed to deliver date was this one. It came early, and if you read this DD, you'll see it came early because of all the media hype and stuff. But yeah, basically, so my positions, to go over really quick, I haven't looked at it much, but I sold out of some stuff. Oh, that one's really not aging well. Sold out of the 370 calls, the 300 calls. I think I broke even on one of them and then took a little hit on the other one. And these 500 calls were already so screwed. I just decided to hold on to them just in case. I did open up I opened up a debit spread today, and I'm gonna have another video, I think, right after this one to explain to you guys how to profit better on options with GME. I'm not gonna go over like how to use options, but you should learn some, even if you don't know how to use them that well. These calls, oh, I opened up calls for next week, and this isn't, these aren't aging well at all. So that is not good or nice to see. This is partially because of spread. It's 126, 133. But yeah, I mean, look at this thing. This is today. So this thing was worth 280 this morning. It's now down to 129. And I paid 230 for it. Now it's worth 130. So yeah, that one sucks. But that gives me some time for next week. We'll see if the theory of the failed to deliver is wrong, or we get some kind of gamma squeeze going. Then these will be very, very valuable. I kind of need to do credit spreads though. That's what I'm thinking. Credit spreads, and then you just collect the premium, and because you never know. We had that big run up yesterday, and then today it just seems like we're back to before. Literally just back to here, just low volume, just sideways. They've got 200,000 shares they can short at least, and they've got options they can manipulate, and it sucks. But yeah, so it's early in the week again, so this could be a nice bull flag, and we could break out to the upside. That's what I got on this account. It's looking better. We're back up to 10,500 just because GME went up a lot today. I think some of the other ones too. Let me see here. So Helicity's up a little bit. Still raised totally flat. I sold out of my Mavis call because Mavis, it dropped down. Maybe I was early. I mean, I guess the call had a lot of time, but I don't care to keep playing it for now. This account's looking good. eBet crushed it today, up 16%. GameStop's up 5%. Affirm's up 2%. And Wrap is up 1.73. Yeah, eBet was that IPO. And it's looking good. Oh, market just closed. Looking good. MACD looks good. Hourly is nice big candles, consolidation. Just looking to break that resistance up here at 25-ish, 20, yeah. So that will be nice. For long term, didn't even look at it. I think Tesla took a hit. They had earnings. I didn't actually really look at the earnings. I think they were fine, but that happens often where something will just kind of drop after earnings. And on this account, I don't think we did any trading on this account. Nope, didn't do any trade on this account. And on our E-Trade, that looks like a whole lot. I opened up a credit spread, more credit spreads on SPY, basically bearish. I think the SPY is going to start coming down before next week. Double top. MACD hasn't crossed over yet, which, yeah, it's not great. RSI is high on it on the daily. This doji, that's typically a sign of a reversal. If, you know, it's one of the things. This tail up here, I don't know. I think, but the SPY, oh man, we'll see on that one. So SPY credit spreads on that. GME, yeah, did a lot. It did. Debit spread today opened up. Did I open up another credit spread? Yeah, so this is the credit spread, and then this is the debit spread. So this credit spread is basically GME has to stay above 175 by Friday close, and we'll be able to keep the credit on that one, which is 240. I'm trying to like have these fund my problem with buying calls. My next video, you should watch it if you're buying calls. If you want to dive into a little bit more complex option strategies. This debit spread, it doesn't matter a whole lot with debit spreads, the percentage, because you're not really, it doesn't really affect you on time decay on theta. So that is, but I'll get into that next video. But look at this, max loss, so it caps my gain. My max gain is 609, max loss is 141. Basically needs to close above 197.5. This is my my play, hoping that GME will close up about 200 by Friday, which you think, oh, that's easy. Yeah, could be. And if it closes by 200 by Friday, I feel like that'll trigger a gamma squeeze. It'll probably go crazy, but this is just how I'm getting exposure at this point. Since it is a spread, there's a lot more spread on the bid and ask because there's multiple contracts, so that's why it's kind of weird. but it's probably about break even on it. But I hope there's good after hours news on GME. We'll see. Thanks so much for watching, guys. Sub up, like up, comment down. Happy money sticks around. And if you made it this far, type in FTD. FTD in the chat. I appreciate it. Thank you so much, guys. Peace out.